strategy. It's a trading strategy that I call the Zoom 25 strategy. The reason why I call it that is that we will be aiming to make only 25 pips per trade. On average, you should be able to get at least about one trade per day. One trade per day. So 5 trading days per week, you should be able to get five trades, 4 or 5 trades, right? Okay, so let's start. Okay, this strategy works mainly on two pairs, right? That's the GBPUSD and EURUSD. You can try it on other pairs also, but I've found it to work most effectively on these two pairs. Okay, so let's just jump right into it. Okay, so for this strategy, we're going to need uh, two indicators. Okay, so the first indicator is already there on the screen, the line that you see there. That's the 20 period moving average. So let's just look at the settings. Okay, it's not just, okay, say 20 period moving average, simple moving average apply to close, right? So then the other indicator that we're going to need is the average true range. The average true range. We're not going to change any of the settings. We leave it at the default settings. So that's period 14. Okay, there. Okay, let me just adjust it so that it doesn't use up a big chunk of my screen. All right. Okay, there it is. All right. Okay, so then the other indicator, so the custom indicator really, but these are just grid lines at every 50 pip interval. At every 50 pip interval. Right, so let's look at the rules of this strategy. Okay, the first thing we're going to need is okay, so let's look at the rules for a buy setup, then also look at the rules for a sell setup, right? Okay, so we would want to buy whenever a candle crosses these lines, these yellow lines. Whenever a candle like this one, when it crosses the yellow line and closes above it, so it's very important to wait for it to close. Don't just look out for the cross. You need to be very patient and you need to wait for it to close, right? So if a candle closes above, then it's a buy signal, right? So we buy right at the close of that candle, just as the next candle is starting, we buy, right? Then also the candle should also be on the top of it should be above the moving average. The candle must be above the moving average, right? So that's the reason why we have the moving average, right? So we only buy when there's that cross and also when the candle closes above the moving average, right? So after buying, what will our target be? Our target will be 25 pips. 25 pips. So say for example, this example, 25 pips, say we're going to buy from this candle. So 25 pips will be, that's 250 points. Okay, somewhere about there. So somewhere about there, you exit your trade, right? Then you wait for the next setup. Now, okay, I know most of the literature when it comes to trading, they always talk about you having a positive risk to reward ratio, or at least what you are risking should be equal to your target or your reward. So what this means is that okay, say for this strategy, we're aiming to make 25 pips. So our stop loss should ideally be 25 pips or lower if we're going to follow that, right? But with this strategy, we're going to bend the rules a little bit. It's okay sometimes to have a negative risk to reward ratio as long as your win rate is very high. There's a trade-off. Every time you have got a very good risk to reward ratio or a very positive risk to reward ratio, say for example you're risking 1 pip so that you make 3 pips. Yes. What's going to happen is your win rate is going to be very low. Right? You'll notice that maybe you'll win 20% of your trades, if not even lower than that. So with this strategy, we're going to, our stop loss is really going to be guided by 2 things. The market structure, we look at support and resistance. Say for example, if I buy from this point, I'm going to look at my previous support. The previous support level was there. So let's just measure to see how many pips that is. Okay, that's about 57 pips, right? So in essence, we'll be risking 57 pips so that we make 25 pips. And to a lot of people, it may not make sense, right? But it's okay if your win rate is very high. And with this strategy, your win rate usually is very high. It's maybe more than 80%. Right. So you really need to keep. Okay. Then the ATR. We said we're going to use the ATR. What's an ATR? Average true range. Okay. I'm not going to get into the mechanics of the ATR in this video. If you can always, I can do a video about ATR sometime later. But we're going to use ATR to set our trailing stop. Remember, our target is 25 pips, but our ATR, okay, let's just look at our ATR reading at this point, at the point when we entered. So it was at this candle, it was about 21 pips, right? So what we're going to do is we're going to set a trailing stop at 21 pips. So when our position gets into profit by 21 pips, we'll start trailing our stop. Because I've noticed even with this strategy, sometimes it gets to the profit gets to 22 pips, 23 pips, then it reverses. That's very painful, right? Imagine just being 2 or 3 pips away from your target, then the position reverses and it ends up beating your stop loss. That's very painful. So to avoid that, we'll use the average true range as our trailing stop. As you can see from this chart, the average true range is ranging from as low as around 10 pips to as high as around 27 pips. Right, so always use your, and the reason why I like the average true range, it also goes with the recent momentum, right? Okay, so yeah, so let's just back test this strategy. So this will be a winning trade. Then what do we do again? We wait for, okay, let me just scroll backwards. Yes, let me just scroll backwards a little bit. Okay. Because we always need to look at these things in context of what's happening, what's been happening recently. Okay, so this was our first trade, right? Of course, this was a winning trade, 25 pips, right? Because the difference between these two lines is always 50 pips, 50 pips. So even without really measuring it, you can see this is more than 25 pips, right? So, but we're not going to be greedy. We're just going to go for 25 pips, and that's it. If you want maybe to get more than 25 pips, my suggestion is that use a trailing stop, right? And don't close the trade. Let the trailing stop close the trade. So if sometimes there's a there's very strong momentum, like what happened here, right? You end up making maybe, I don't know, 50, 60, 75 pips. As I can see, this move right here, it was a 100 pip move. Imagine if you're trailing it by 25 pips, you'd have been stopped out when the market reversed by 25 pips. So you'd have bagged maybe around 70, 75 pips profit, right? But I like to keep things simple. I go for my 25 pips. Okay, so let's look at where it started here, our first trade, right? So the other thing that you also need to look at is support and resistance. Sometimes support and resistance, so you're going to see the relevance of that a little later. Okay, so then our next entry was right here, so we could have taken a buy trade just right there, right? Because the entry conditions have been met. The candle is crossed and closed above the yellow line or the yellow level, right? Then from that point we're going to aim for 25 pips. So let's see if we got the 25 pips. Okay, 25 pips. All right, it was somewhere, yeah, we got the 25 pips, right? Okay, one thing that you could also do, you could either use the market structure to determine your stop loss, or you can put your stop loss at 50 pips, right? Okay, so for this back testing, let's work with a stop loss of 50 pips, so that is as scientific as possible, right? Then we continue watching the market. All right, then right here we have a second entry, right? Okay, all right, sorry about that. Okay, where is our second entry? This was the first entry, this is the second. Okay, then we keep watching the market. Yeah, this is very interesting. Just look at this candle. This candle crossed the yellow line and closed below it. So this is a valid sell entry. So you could sell from there. Okay, let's look at 25 pips right there. We are out. You've already taken your profit, right? Then you're going to watch. You continue watching it. There. Okay, this one is going to be a little bit tricky because, can you see, we now have a valid buy signal here. I'll come and I'll have my stop loss here. I'll aim for 25 pips. 25 pips. We got 25 pips right there. But the funny thing with this one is, just after this candle we actually got a valid sell signal, because it crossed the yellow, right, and then closed below it, and also below the moving average. So this is a valid sell, right? But the reason why I'm not going to take this trade is because I'm already in a buy trade, right? And that buy trade is still good because it hasn't hit the stop loss yet, right? So I'll continue with that, and obviously we took profit on that one. Can you see how simple and effective this is? Look at this candle. This is another buy signal. Buy from there, close of that candle. We want 25 pips. 25 pips. It's right there. Right? Then So I think we've had how many winning trades? I think about four or five. I'm not sure. Yeah, about 4 or 5. So we're still winning. We're going. Then right there. The only thing that's worrying me right now is that the market is making, it's moving into uncharted territory. If you look at our chart, right here, this is the high. So sometimes I'm a bit nervous buying from highs, but let's see how long the trend lasts. Okay, here we've got a candle that crossed above, which gives us a valid buy signal, right? Okay, I think that's going to be our first loser. Okay, let me just look at the ATR right there. Okay, about 16 pips. Alright, didn't get to 16 pips. No, 14, got to about 14 pips. Less the spread, maybe about 1.5 pips. No, we're not going to get to the 16 pips. So this was our first loser. So we're going to, okay, so had we entered here, where we're going to put our stop loss? Yeah, you could have put our stop loss just right below here, which is close to the 50. Okay, let's just work with 50 pips. So this is minus 50. It's like 2 trades. It's like we've lost 2 trades. So far we've had 5 winning trades and 1 losing trades, which is equivalent to 2 of our winning trades. So 5 minus 2, that's 3. So far we are up 75 pips. Still okay, right? We continue watching the market, and boom, we have our sell signal right here. So let's see if we got the 25 pips. Yeah, just about there, right? Just about there. Got the 25 pips. Then let's continue. Another winning trade, another 25 pips, right? Now look, this is where it's going to get a little bit tricky. We have a buy signal right here, but when you look at the market structure, we've had a high, then the market has come back to test this high. So what I would want to do is I would want to try and avoid buying buying at resistance. Let me just change the color of this. We're trying to avoid buying at resistance, but anyway, rules are rules. That's going to take away 50 pips. That's going to take away 50 pips this trade. We're going to buy here, and obviously this was a loser. So that's 50 pips gone, right? So we continue watching. So as you can see now, both the market has visited this level twice. I would call this as a valid area of resistance. Now I would avoid buying this. So right here, this trade, I would have avoided it because of that, unless we then create a higher high. That's the only time maybe I'll be willing to buy. Otherwise, I would want to buy lower. Okay, so this trade would have ignored it. Then let's look at this trade right here. It's quite interesting. Sell, obviously this was a profit, and another sell. See, the market is now trending lower. Profit, making back our money. Now can you see now, because our resistance is up there, I feel more comfortable buying when I can see my resistance right up there. I feel way more comfortable buying. So cross here, obviously we made money. Another trade, obviously we made money. But beyond this, I'm not going to buy, because we have already established there is strong resistance up there. We've already established that. So let's continue. It's closed sell, valid sell order. Yes, sell. Okay, this one is going to be tricky. Let's measure to see if we got 25 pips. Okay, 22 pips, 22.9, I would say 23 pips. All right. At the point of entering this trade, let's just look at our ATR. What was our ATR reading? Oh god, 14 pips. So what we're going to do on this one, we're going to enter this trade, but with a trailing stop of 14 pips. So our final profit would have been at the 22, say 22 pips minus 14. What about 8 pips? Yeah, would have been stopped out at 8 pips profit. So yeah, it's worked in our favor. Okay, it has crossed here, but we're not going to take this trade. Why? Because it's below the moving average, so it's not a valid buy trade. So we're going to wait for a break of the next line, right? This line didn't close above it, so this is not even a buy trade also. Then this one, possibly we would have bought on this one, but this one's going to be a bit tricky now, boss. It's quite close to our resistance, but I would have taken it. But let's just look at the distance between the entry and the resistance. It's about 50 pips, 51 pips. So aiming 21 pips, it was possible, but not every trade works out. It didn't work out. So on this one, minus 50 pips. Then we move to this trade, sell. This is a valid sell order. Okay, let's look. 25 pips. Did we get out 25 pips? Yes, we got out 25 pips. Now we're buying. Our last trade would have been a buy, right? And those would still be in this trade. Let's just look at how many pips profit will be in there. Would be in about 8 pips profit. At some point we would have gone as high as 16 pips, but we're targeting 25 pips, somewhere just about there. I'm sure when the market opens on Monday, we'll probably hit our take profit, right? So can you see, this is a very simple trading strategy. Sometimes the simple things in life are the most effective. Not very complicated, very easy buy and sell setups, very clear profit targets, very clear stop losses, trailing stop. You're going to use your ATR for your trailing stop. So yeah, this is a strategy that you can use. So it's just one of the main strategies that we use, but I like this one. It's very simple. I use it for GBPUSD, I use it for EURUSD, and also sometimes I do use it for gold. I sometimes use it for gold, yeah. So you can try it. If you want to learn more about this strategy and other strategies and about forex trading in general, not only forex trading, stock trading, indices, that's your Nasdaq, Dow Jones, S&P 500, you can reach out to me. My details are in the description box, right there. Also, you can also open an account, a trading account, with our preferred broker. right? The link is also in the description. You can use that link. That also helps us, and it helps us to continue producing this content for free. We won't have to charge for this content that you've seen right here on YouTube. Okay, so let me know what you think about this strategy in the comment section, and see if you think there's a way we can maybe tweak our settings to make it a little bit better. Please do get in touch, right? So thank you.